As the cryptocurrency world expands, so do the scams. Whether you're a seasoned crypto trader or new to the market, the dangers are real and evolving rapidly. Scammers are becoming more creative, making it crucial for investors to stay informed. In this video, we'll break down the top 10 crypto scams you need to avoid in 2024, so you can protect your hard-earned money and investments. The more you understand about these threats, the more you can guard yourself from falling victim to them. By the end of this video, you'll be equipped with the knowledge to avoid these traps and safeguard your crypto assets. Number 10. Phishing scams. Don't get hooked. What are phishing scams? Phishing scams are one of the oldest tricks in the book, but they remain alarmingly effective in the crypto space. Scammers will pose as legitimate companies, exchanges, or wallets and try to trick you into revealing your private keys, passwords, or other sensitive information. The target? Your wallet, of course, and once a scammer gets into it, there's no undoing the damage. How they work. These scams often come in the form of emails, fake websites, or even phone calls that look or sound identical to official platforms. You might receive a message prompting you to log into your wallet or exchange account to resolve an issue. Sometimes they even send an urgent notice claiming your account is at risk, creating panic that encourages quick, thoughtless action. Once you enter your details, the scammers have full access to your funds, and it's game over. The rise of crypto-specific phishing. Crypto-specific phishing attacks have been on the rise. In fact, in 2023 alone, crypto phishing attacks increased by 40%. Why? Because crypto transactions are irreversible, making it an attractive target for hackers. If they can steal your crypto, there's no bank to reverse the charges, and you'll likely never see your assets again. How to avoid phishing scams. Always double-check the website before entering any sensitive information. Even a minor difference in the URL, like replacing an O with a 0, can signal a phishing scam. Use two-factor authentication, 2FA, on all your accounts, and avoid clicking on suspicious links. It's also wise to bookmark official websites you frequently use, ensuring you're always going to the right place. Never share your private keys or wallet information, no matter how convincing the message might seem. Number 9. Pump and dump schemes. Beware of false promises, the allure of quick gains. In the world of cryptocurrencies, pump and dump schemes are becoming increasingly common. Scammers hype up a lesser-known coin or token, promising huge returns and getting others to invest, artificially inflating the price. The pitch? A surefire win, one that'll double or triple your investment overnight. It's tempting, especially for those new to crypto. But the reality? It's all smoke and mirrors. How they work. Once the price spikes, the scammers sell their holdings at the top, crashing the coin's value. This happens so fast that before you even realize what's going on, your investment is practically worthless. These scams are often organized in private groups, including social media channels like Telegram or Discord. Promoters, influencers, and even bots are sometimes used to generate hype, convincing more people to jump on the bandwagon. Social media's role in pump and dump scams. Social media plays a big role in these scams. You'll often see these coins promoted by influencers, claiming they've already made huge profits, encouraging their followers to do the same. It's all part of the scam. Once they've pulled in enough people, they sell off their holdings, leaving everyone else with a worthless coin. How to avoid pump and dump scams. Be cautious of any coin that's being aggressively promoted on social media or in online forums. If it seems like everyone is suddenly talking about a coin no one's ever heard of, that's your first red flag. Research the coin's fundamentals, and if it lacks a solid project or use case, it's best to steer clear. Asterisk, asterisk. If the hype is too good to be true, it usually is. Number 8. Fake ICOs, initial coin offerings. Don't fund empty projects. What is an ICO? An initial coin offering, ICO, is a fundraising method where new crypto projects sell their tokens to investors before launching. While legitimate ICOs can offer great opportunities, Ethereum itself was an ICO, scammers have infiltrated the space with fake ICOs that promise the moon but deliver nothing. How they work. Scammers create flashy websites, white papers, and marketing campaigns to lure investors. Some may even feature fake partnerships with big companies or high-profile figures to appear more legitimate. Once they've collected enough funds, they vanish, leaving investors with worthless tokens and empty promises. Not all ICOs are created equal. The explosion of ICOs has made it difficult to differentiate between legitimate projects and scams. In 2022, approximately 80% of all ICOs were identified as scams, with billions lost in fraudulent activities. This trend is expected to continue in 2024 unless investors become more cautious. How to spot a fake ICO? Always check the team behind the project. Look for verifiable information and track records. If a project lacks transparency or has an anonymous team, it's likely a red flag. Also, pay attention to the project's goals and roadmap. If it sounds too good to be true, it probably is. Legitimate projects will have clear, realistic milestones and a solid use case for their token. Number 7. Ponzi schemes. Watch out for unrealistic returns. What's a Ponzi scheme? Ponzi schemes in the crypto world promise guaranteed returns, often with minimal risk. These scams rely on new investments to pay out earlier investors, creating the illusion of profitability until the scam collapses when the pool of new investors dries up. They tend to target newcomers who are eager to make quick profits, unaware of how unsustainable these returns really are. How they work. Scammers lure in victims with promises of consistent high returns. Early investors may even receive payouts to build trust and encourage them to invest more or refer others. As the scheme grows, it becomes increasingly difficult to sustain the promised returns. Eventually, the scammers disappear with the funds, leaving most investors in the red. Ponzi schemes in 2024. Crypto Ponzi schemes are evolving. Instead of the traditional double-your-money offers, scammers are now using more sophisticated tactics, such as DeFi platforms and staking schemes that appear legitimate on the surface. Don't be fooled by flashy websites or guarantees of risk-free profits. How to avoid Ponzi schemes. Be skeptical of any investment opportunity that promises guaranteed or high returns with little to no risk. If a project offers consistent returns regardless of market conditions, it's likely a Ponzi scheme. Legitimate investments come with risks, and no one can promise constant profits. If someone is promising you the moon, they're likely selling you empty space. Number 6. Rug pulls. Avoid falling into the trap. What is a rug pull? Rug pulls occur when developers create a new cryptocurrency or DeFi, decentralized finance project, attract investors, and then suddenly withdraw all the funds, leaving investors with nothing. This scam has become particularly common in the decentralized finance space, where anonymity and the lack of regulation create a breeding ground for fraud. How they work. Scammers create an attractive token or DeFi project with promising features. They use buzzwords like yield farming, staking, or liquidity mining to attract attention. Once they've raised enough capital, they pull the liquidity from the exchange or platform, crashing the price of the token to zero and disappearing with investors' funds. It's called a rug pull because the investors essentially have the rug pulled out from under them. The growing problem of DeFi rug pulls. With the rise of decentralized exchanges, DEX like Uniswap, rug pulls have become a prevalent scam in the DeFi space. The lack of regulation and oversight makes it easy for scammers to create projects, lure in investors, and then disappear overnight. In 2023 alone, rug pulls accounted for over $2 billion in lost funds, and this number is expected to rise in 2024. How to avoid rug pulls. Research the project thoroughly before investing. Look for projects that have locked liquidity and open source code. Projects with anonymous teams or unclear goals should raise red flags. Check the community surrounding the project. Are there legitimate developers or partners involved? If a project seems hastily thrown together or is too focused on hyping short-term gains, approach with caution. Always approach new projects with caution, especially in the DeFi space. Number 5. Impersonation scams. Don't trust unknown sources. What is impersonation? Impersonation scams involve scammers pretending to be high-profile individuals or companies within the crypto space. These scams often occur on social media platforms, where scammers create fake accounts that closely mimic real ones. The key here is the illusion of legitimacy. They want you to believe they are an official source to gain your trust and, ultimately, your money. How they work. Scammers might impersonate famous figures like Elon Musk or established crypto companies. They'll reach out to you, often promoting giveaways or investment opportunities. For example, you might see posts or messages saying, "Send 1 Bitcoin and we'll send back 2 Bitcoin." It's the oldest trick in the book, but people still fall for it, hoping to cash in on what seems like a generous offer from a trusted figure. In some cases, scammers will hack verified accounts and temporarily control them to make their schemes make even more convincing. Before the account can be recovered, the damage is already done. How to avoid impersonation scams. Be highly skeptical of giveaways or investment opportunities that seem too good to be true, especially those involving cryptocurrency. Official companies and reputable individuals will never ask for funds in this manner. Always verify the identity of anyone contacting you before engaging with them. Double-check social media handles and never click on suspicious links. Number 4. Fake wallets. Protect your private keys. What are fake wallets? Fake wallets are malicious apps or software that pose as legitimate cryptocurrency wallets. These wallets may appear in app stores or online, claiming to offer secure storage for your crypto. However, once you deposit funds, they're transferred directly into the scammer's account, and you'll have no way to recover them. How they work. Fake wallet apps are designed to look like reputable wallets. They might even appear in official app stores with seemingly good reviews, making them appear trustworthy. When you download the app and input your private keys or recovery phrase, the scammers gain access to your wallet, allowing them to drain your funds. The hidden danger of fake wallet apps. With the growing popularity of mobile crypto wallets, fake wallet scams are on the rise. In fact, 2023 saw a surge in malicious apps specifically targeting crypto users. Scammers take advantage of people's trust in App Store platforms, knowing that many will download apps without thoroughly checking their legitimacy. How to avoid fake wallets. Only download wallets from official sources or directly from the website of a trusted provider. Avoid downloading apps from third-party websites and always double-check the developer information and reviews. Never input your private keys or recovery phrase into an unfamiliar app. Number 3. Cloud mining scams. Mining in thin air. What is cloud mining? Cloud mining allows users to rent computing power from a third-party service to mine cryptocurrencies like Bitcoin without owning physical mining hardware. While there are legitimate cloud mining operations, scammers have infiltrated the space with fake services that promise high returns for minimal effort. How they work. Cloud mining scams typically lure investors by offering attractive returns and affordable plans. After collecting payments from multiple users, these services either stop paying out or disappear entirely, leaving investors with nothing. In some cases, scammers will provide fake dashboards that show mining activity to create the illusion that you're earning profits, when in reality, nothing is happening behind the scenes. The rise of cloud mining scams. Cloud mining scams have been gaining popularity due to the high barriers of entry for traditional mining. Many new investors don't have the technical expertise or resources to mine on their own, making cloud mining services appear as an attractive option. Scammers take advantage of this gap, promising profits with no real mining operation in place. How to avoid cloud mining scams. Before investing in any cloud mining service, do extensive research. Look for transparency in their mining operations, customer reviews, and payout history. If a service promises unusually high returns or has vague business details, it's a red flag. Legitimate cloud mining requires substantial capital and infrastructure, so be cautious of any service that promises otherwise. Number 2. Malware attacks. Watch your devices. What is crypto malware? Malware specifically designed to target crypto users is known as crypto malware. This malicious software can be installed on your device to steal private keys, intercept transactions, or even mine cryptocurrencies without your knowledge, known as cryptojacking. How they work. Scammers often use phishing emails, fake software downloads, or infected websites to trick users into downloading malware. Once installed on your device, the malware can log your keystrokes to capture your wallet passwords, steal your private keys, or redirect your cryptocurrency transactions to the scammer's address. Some malware even has the capability to silently mine cryptocurrency using your device's resources, slowing it down significantly. Cryptojacking, the silent thief. Cryptojacking is a particularly insidious form of malware that uses your computer's processing power to mine cryptocurrency without your consent. It's not as immediately devastating as having your funds stolen, but over time, it can severely damage your hardware, increase your electricity bills, and reduce your device's performance. How to avoid malware attacks. Be cautious when downloading software or clicking on links. Use reputable antivirus software, keep your device updated, and avoid downloading anything from unknown or unverified sources. Additionally, consider using hardware wallets, which are less vulnerable to malware attacks than software wallets. Never input sensitive information on an unsecured or suspicious device. Number 1. Exit scams. Don't be left in the dark. What is an exit scam? Exit scams occur when the developers of a cryptocurrency project or exchange suddenly disappear, taking all of the investors' funds with them. These scams are particularly dangerous because they often involve seemingly legitimate projects that have built up a significant user base and trust within the community. How they work. An exit scam typically starts with a promising project, whether it's a new cryptocurrency, DeFi platform, or exchange, that raises significant capital through an ICO or venture funding. The project may operate normally for a while to build trust and legitimacy. However, once the scammers have collected enough funds, they abruptly shut down the project, disappear, and leave investors with nothing. High-profile exit scams. Exit scams have plagued the crypto world for years, with high-profile cases like BitConnect and OneCoin swindling billions from investors. Unfortunately, these scams are becoming more sophisticated, making it harder for even experienced investors to detect them. How to avoid exit scams. To avoid falling victim to an exit scam, always look for transparency within the project's team and business model. Be wary of projects that offer high returns with little effort or seem too focused on aggressive fundraising. Additionally, check whether the team has been doxed, publicly verified, and look for reputable backers or partnerships. If a project lacks clear communication or accountability, it's a red flag. Stay safe. Protect your crypto in 2024. The world of cryptocurrency is full of opportunities, but it's also a playground for scammers looking to exploit the uninformed. As the crypto space continues to grow in 2024, so too will the complexity and creativity of scams. By staying vigilant, doing your research, and avoiding the traps outlined in this video, you can protect yourself from falling victim to these schemes. Crypto scams might be getting smarter, but so are investors. Educate yourself, verify everything, and always err on the side of caution. With the right mindset and awareness, you can enjoy the benefits of the crypto revolution without becoming another statistic. We hope you find this video helpful. Kindly hit the like, share, and subscribe button to see more of our upcoming videos. Stay safe. Bye.